This is Market Week Live for February 7th, 2025. Information and support for traders and investors. Welcome, everybody. This is what we have coming up today. We're going to do our level 4 members. You can ask your questions and you can put those in the Q&A right now. That's level 1 to 4 members. Topics are for our services, trade planning, chart analysis, trading issues, anything that you might have. That includes if you're stuck on something and having a problem trading in the market, I can often help you with that regarding the emotional aspects of trading and how that might be getting in your way. Matt's going to do a review of our services, see the in-depth level of our content, and he's going to show you our level 3 special. That's 50% off for 1 month non-recurring. Yes, if you buy that, you get a massive amount of our content, almost everything, and then you won't be charged again. So he's got great stuff to show you. I'm going to look at the stock market, probabilistic projections and time and price. And you'll see our advanced indicators and applications. And I'm going to look at stocks with some upside potential in a rotation, something I don't normally do in that section, but I think it's kind of valuable. So I'll do what's a little mini stock sectors right there. And I think you're going to find that to be interesting. If you're brand new, get acquainted, take that level 3 special, 50% off, non-recurring. Matt's going to show that to you on YouTube. Subscribe to our channel, click that notification bell, and do like this video. Give it a thumbs up. And on X, follow us at Ask Slim. Any questions you might have, write to Matt at AskSlim.com. This is the important disclaimer. This says that everything we bring you is for entertainment and educational purposes only, no matter what form we bring it to you. And also, you should always consult with your investment advisors and do refer to your own trading plan. You need more information on our legal, you can go to the slim.com website and get that. All right, if you need to reach us on membership issues or website issues, then you can write the team at AskSlim.com. If you have any questions on what we're going to show you here on our content, educational information or analysis, and first-time specials or upgrades, write to Matt at AskSlim.com. Today's host today, we have everybody here. You won't recognize Arvi because he's got his voice a little bit changed today. So this is our great analytical team. And of course, I've been at this for over 50 years. Matt's been a couple of decades. Same thing for Arvi. Katie, I don't know how long you've been trading, Katie, but you've certainly been with us for a couple of years and learning our style of analysis and becoming an expert in option trading for many years. And you can learn about us by going to AskSlim.com, meet the team, and you'll see our interviews that are in there. All right, so we're going to get into our Q&A. Remember, this is for level 1 to 4 members. So while we're doing this, if you want to put some up, we'll take a few more. Right now, my portion is going to be gold, silver, platinum, and Bitcoin, and natural gas. Those are the ones that they asked me in the commodities. Then RV and Katie will take questions on the equities ETF side if you have any of those. So now is the time to put those in. And in about 5 or 6 minutes, we're going to cut it off. We'll do the best we can to cover all of your questions. So I'm going to jump now into the first one that people are asking about, and that is the gold market. So you should be seeing my gold charts right now. And we're looking at weekly and daily, and I have 2-hour up here also. So we're looking at that. The reason I have all 3 of those up here is because the 2-hour has a lot of our good information in here, specifically like the market condition indicator, which is on the bottom. And you can see that right over here, which is showing you that it's trading up near that 100, positive 100 level, and it's been there for a very, very long period of time. So the gold market condition has been very, very strong. Also over here, you see our option bias indicator, and that option bias indicator is something that helps you to put your positions, if you're in the option market, on the right side of the market, developed so that if you like to sell option premium, you know what direction has the highest probability of an upside or downside move. And then you can then control your positions better by having that information. So that's always important. And our slim ribbon PO on the bottom, which gives you signals of the color showing you the momentum condition, and those arrows when they come up tell you when there's been little corrections and upside or downside resumptions in momentum. So all this is extremely valuable when you do this analysis, that you understand all of that. And on top of that, or that all layered over, our analysis, which the core of it is cyclical analysis, which looks at the rhythms in the markets. So let's take a look at the gold chart. I'm going to open up this weekly chart right over here so you can see the rhythms that are in there. So interestingly, I have the silver overlaid on it, so you can see that that dashed line in there is the silver cycle. In other words, it's pretty close to what's going on in the gold market. This cycle, you can see this big one right here. That's the dominant cycle, and that's made up of 3 minor cycles that have some good visible rhythms that are in here, as you can see in this one here, and then in this one here. So this is a fairly common shape when you get into stocks that are healthy or symbols that are healthy, where it creates a diamond. In other words, this part of the cycle brought you the declining phase, the corrective phase, this rising phase in here, then brought you the next rise, which had a problem developing. That's why you get the diamond shape. So it's a triangle and then a mirror image of that triangle that makes the diamond. And then here you could see this our reversal scout, where the intermediate, that's kind of money that stays in the markets for many weeks. This is then turning up and telling us we have positive momentum in here. And then once it broke out of diamond, well, it's in very, very good shape. And then we start to look at the upside projections. And those upside projections right over here are up to this 29.29 area, and this around 30.40 is where that is. Now, what is this right over here? This is a little corrective area, and you can see this light gray line in here is showing you that this is an area that's likely to have some pullback in here, probably a little one. And the reason it's little is because, well, it's run out of time. So that just shows you that you get some kind of a little pullback in here, but then the dominant forces take over, and these arrows are showing you that, where it either comes up to this, 29.29 level, or this 30.40 level right over there. Either one of those can be where that's next rising phase is. So when you look at this, I mean, you see this declining area right over here. Does that say sell it? Does that say short it? No way. That just tells you that there's a little finish to this right over here, and that the best opportunity may be a buying in this swamp cycle. What does swamp mean? It means that this upside momentum is so strong that it can't let anything come to the downside. And then you get very, very small declines. Sometimes they shape up like this rectangle that formed right in here. And then when the next cycle began to move up, well, then you had that positive movement. And that's where we are right now. Likely to get this minor cycle, giving a little ground in here, and then moving back to the upside. If I look at the daily chart right over here, you can see that, well, there's, a minor cycle right over here. You can see that little designation of that cycle potentially having a little correction right over there. And then you have this dominant cycle, which is continuing to move to the upside. This is the slim ribbon, and that shows you how strong it is. The slim ribbon often is a support and resistance area. This screams the value of that. By the way, this is a free indicator. Right to matt@asklim.com. You can find out how to put this up on Thinkorswim, or this is also available on some other sites, so you can ask about that. And then the slim ribbon PO, which gave you that signal right there of the upside resumption. So this is a very positive condition. You might get a little pullback on this minor cycle, but then after that, it looks like back up to these areas up here. Again, we're looking for, let's just say 29.30 or 30.40. Those kind of look like the numbers. These are some monthly extensions and that are right there. Those come in right around 29.30 right there. So 2930 to 2940s in there on this extensions kind of look like a tough spot, you know, though, and we're getting close up to that right now for a little bit of a correction. But when you see that, you really see that you can be a buyer. I don't really need to give this much detail on everything, but this is kind of where I do teaching around of what we look at. This is the 2-hour chart, very important in here. As you could see that the 2-hour information, the reversal scout, the slim ribbon, all of that is important. You could see this is starting to get choppy right in here. And maybe that's the sign of that little correction we're looking for in the gold market. But until this turns negative right over here, this turns down, our market condition monitor will signal those things. You'll then get an idea that it's moved into the correction. But right now, it is super strong. So that's a look at the gold market and very positive conditions that we look at. So how does the silver market compare? Let's look at SI right over here, and you can see, well, it's not quite as strong because it hasn't gotten up to new highs like the gold market did, but it has strengthened. And you can see in here, well, this is that minor cycle there. Here's another minor cycle right in here. There's one over here that shifted a little, so we're not sure which of those is right. And there's the gold cycle there that you can see. So this really looks like, you know, it's moving up, it's strong, weekly conditions are strong, momentum is strong, and the first target that we see up here is around 3380. Then it's up here at 3504, and then the bottom of this fib extension, which is around 3591. So you can see everything on the weekly is positive. Here on the daily, you get this corrective period potentially right in here. So we have that little line that shows you the completion of this cycle right there. But this certainly doesn't look like any kind of a sell. It just looks like it might make a little higher ground that might have a little correction, but then this is where it takes over again, and you get this upside a move right there that would align with strength here on the weekly pushing up, strength here on that new cycle on the daily right over there pushing up, which begins sometime around the end of February or early March. So correction right in here for a couple of weeks, potential minor, and then moving to the upside again. And you can see in here, silver will tell you, and you could see that big reversal right there on the 2-hour chart, that it might be reaching an area or it wants to correct. Look at high waves right over here, those big wicks. And that shows you that there's selling in that area, just over $33. So minor corrective period probable. And then after that, probable, a big upside move. What do you want to do? Sell it here or buy it here? I think it's pretty clear that you'd be waiting for an opportunity to be a buyer. Let's take a look at platinum while we're in the metals, because we had this request. And we'll look here at the platinum market. And let me just get this analysis up here for you to see. And you can see platinum, let's look at the weekly here, strong. Momentum turned up right over here, right on that big dominant cycle low. Well, it was expected that sometime in late December would be when the daily chart synced up with the weekly chart. And this low right over here was December 30th. So you can see how that worked. I mean, really perfectly in the analysis. Cycle analysis is like the heartbeat of the market. It's just rhythms in the market that we identify with all of these other applications, all of these other studies that we put in there to help us understand what's going on. You can see in here, this is positive momentum. Then you can see in here, as we look at platinum, that it kind of had this is what's known as a positively configured right-hand translation. That's a cycle language for it made a pattern that's very strong. In other words, it could rally most of the time to the right side, and then when it corrected, it only corrected into the top of the support zone. That gives us a message, as again, it comes into the slim ribbon and then begins to move up. So here's the projections here. There's a resistance right over there around 1063. We're looking at least to get up to the major cycle peak that comes off the weekly. Let's say 1075, and this is 1106. So those are the upside projections for this cycle that really looks like it just started right in there, as you can see. So that is a look at the platinum market. Let's take a look at Bitcoin /BTC. And Bitcoin, this is really, quite interesting when you look at that. So we weren't, and when you go back over here, when it was trading in this really wide, choppy range, it could have been a low here on that cycle. Now that's grayed out and ghosted because, as it turns out, there was actually some movement in there. In other words, the selling didn't complete here. The selling completed right here. So that shifts the cycle out a little bit. And then you can see the rally came. So you had the momentum turn positive here. This is so key if you're doing this kind of analysis to have our reversal scout on your charts, because this gives you so much information, especially about understanding cycle rhythms. And then you had this corrective period going on right over here, which, well, is this the low? You see the question there that we put there for our members. Well, is that the low, or is it going to come out over here? There's a possible sink at the end of January to early February. So here we are, early February, and the daily chart has a pattern that looks like it could bottom over here. So what does that mean? It then means this cycle right over here was extremely positive, and once you get upturns in momentum, you're likely to begin to move to the upside again, and that would give you this. That would give you a move there to new highs. Here's your extensions from the daily chart. This is 117,800. This is around 123,500. Those are reasonable upside expectations after this strong move here. I know many of you know that I'm very skeptical of crypto and Bitcoin, but that has nothing to do with our agnostic analysis. What the charts tell us and the conditions say to us is what we share with you. So here's that daily chart right over there. And you can see here on the daily chart, this was pointing to this pullback right over here. Momentum is neutral. The slim ribbon just is neutral, chopping on itself. And this is when you get the slim ribbon doing this, laying on top of itself, it's giving you information that this market is correcting. Now, this correction was just sideways. You can see it here on the weekly, just sideways. Momentum there a little weak. And this right over here looks like it's going to be coming to the downside for 1 or 2 more weeks and then beginning to move to the upside again. So that's a look at Bitcoin. If you look here on the 2-hour chart in Bitcoin, you can see it's so choppy in here. It's going negative, neutral. I'm colorblind. Negative again, neutral. So that's you can see in here how choppy this is in this correction. Bitcoin clearly is in a sideways correction. And when you look at this cycle right over here, which says this is an area that sellers could come into the market, but they're not. What does that tell you? It tells you that there are forces that are bigger than this, longer than this, that are preventing it. That is bullish, and that says there's another move to the upside in the Bitcoin market. My last one for the rest of the team is natural gas. So we'll take here a look at the natural gas market. Just get the daily chart up here, and we'll take a look here at this. Just absolutely this. We're going all the way back here for a few years, as you can see. Look at these cycle rhythms. They are just spot on. They're so gorgeous. And what it tells you is that we are in this phase right over here. So what is this phase? Dominant cycle in corrective mode, intermediate cycle in corrective mode, minor cycle in corrective mode. All 3 of those. We were looking for a correction. You could see here momentum turned over. Look at the same thing right in here. Look at the same thing here, and look at the same thing right in here. This is where you get your liquidations, downside corrections. However, look what's going on here. We have this, what we call a basing cycle. In other words, you had a big downside movement here, which came all the way from over here, which is August of 22, all the way till it's made low over here, all the way in 24. But now what you've done is you're creating this upward basing cycle, which now what it's essentially done is it's taken these cycle patterns in here and skewed them to the upside. What that does is it gives you a higher bottom and then a higher bottom. Once this correction is over, there's an upside release, and then the probability is it goes up again. So it's reasonable to have these targets pointing up to high fours into the fives right there for this period coming out into the late spring and into the summer. So the weekly or intermediate patterns are saying that this is bullish. This is in a corrective period right over here. You notice this line is pointing down. Do you understand that a down pointing line could be bullish? This one is bullish because it's talking about the completion of a cycle. So that's what we have in here, showing you that in here. But I wouldn't sell it. I mean, unless I was a day trader that I saw weakness in a particular trade. The reason these lines are off is because there was a roll. So, and I haven't updated this yet. So sometimes I can get that to correct by coming in here. Let's go to futures, just for contact changes, apply. Okay, all right. So I don't quite have this in a way that we can look at that really clearly. Just see if I can get it right in here. Sometimes I can get this to fudge it for. All right, be patient with me, please. Just going to grab it right here if it will let me. These are little tricks. There you go. So I kind of fudged it right there, and I really have to do an update because of the roll, but you get the idea right in here. This is that corrective period. The weekly and daily. I just showed you the weekly pulling down into March. This is also that daily doing that. So this is how we use the timing in here to help us understand how there's the principle of synchronicity says that these different cycles will have their troughs at the same time. So this one right over here is this first or second week of March. So this one right over here is the first or second week of March. This is your corrective period right in here. And then what this says to me is that, this little rally going on here is probably this minor cycle right there. And then they'll roll over together. You get one more move to the downside, and that is the opportunity to nibble on the long side. So you have a corrective condition in here, momentum negative right over here, momentum in here negative. Note the top warning that came right there on the option bias indicator. That came right there, and notice the timing right over here where that came. That was beautiful. That's that little orange dot that you see right over there. That's where you got that warning right there. And now you see in here that short term was positive right over here as you got this little rally on the near term, actually, the 2-hour chart, and the reversal scout is just rolling over, and this is just beginning to change. So this says to me, now's the time you might look for that one last pullback to begin before we get into that favorable period. All right, I'm going to turn this over to the team. I went through 5 futures and did some teaching in there, and I know that the team is going to teach you also. So take it over.
Okay, I'm going to look at KRE, which is the regional banking ETF. Let me know when you can see that. Are we good?
Yep.
Okay,
Good to go.
so here you can see these blue vertical dashed lines. That is what we call the weekly cycle timing window, and it's the period of time when we would expect this cycle to form a trough and then move up into the rising phase of the next cycle. And it looks like we got that low just a little bit early and moving up already. And right now, I don't have it in here, but we can put in the retracement tool, and you'll see that we are right at the top of, we've tagged the top of a resistance zone. This is the 61.8% fib. And what I do have in here is the 78.6 and then the prior cycle peak. So we do have an upturn with momentum here. This is our reversal scout. And when it turns green around the time when we have a low anticipated, then that helps us to confirm the intermediate low. For those of you who want to put these cycles on your chart, we do have an average length of 23 bars. And these are the top 10 holdings as of last fall. Over on the daily chart, you can see that this is the low that corresponds to that intermediate low, and we've moved up again. This is into the resistance zone here, and there's the 78.6% fib at about 67.5. Would expect this to be able to get up that high based on this positive momentum. We have a reversal scout that is green and a slim ribbon that is green. So barring any event that we can't see yet, we'd expect this to be able to continue higher before retracing out here in the mid-March time period. And so this is looking pretty good. I will turn it over to you, RV, for EWG.
All right, great. Thank you, Katie. Appreciate that. Let's go ahead and pop over to EWG and then hand this back off to you guys. On the intermediate term here for EWG, you can see that we are still in that rising mode here. Formed its low, very interesting. Then a higher low that then set up that move higher. So still in that rising mode, 35 to right around 36 or so is our zone here on the upside. And then a level higher than that being the old all-time high at around 36.46, and then a 127.2 fib at around 37.15. If we go ahead and hop over to the short term, there is a super clear pattern that has been in place for many months here in the EWG. We just formed that low. You can see this is a super strong right-hand translation. You can see that right there. That formed the low. Then we got a new high already. Okay. So right now, the highest odds would be we would hold this zone from right around 34.5 to 34.18. And then we'd be looking for this to turn back up to the upside again into this zone here from 35.36 up to around 35.78. If it loses the 78.6 on the downside at 33.92, that would be short-term bearish. And you can see when our low is due here. And I'm going to go ahead and hand this off to you, Slim.
Okay, I am back with you. You know, this is going to date me a little bit, but Arby, listening to your voice, it takes me back to the days when I watched wrestling and Dick the Bruiser and the Crusher were on there, and they had those voices like this. You know, you sound like a wrestler to me.
That's right. I love that.
All right, one more question on here from Waldo. Hey, Waldo, nice to hear from you. Waldo and I have had some fun conversations back and forth. He's asking about DXY, which I didn't show that analysis. And of course, you can get that analysis by becoming a level 2, 3, or 4 member. The question was that he saw on the news today that looking at one of the channels that DXY was on support. And how does this impact the gold retracement? That's really a great question because the inverse correlation to gold and the dollar has been great over the years and over the decades, but not now. We've kind of lost that as the dollar got very strong, and that didn't scare the gold market at all. I think they're really looking at different things. Normally, you know, when interest rates get strong, that does help the U.S. dollar, and that did happen. And that means the gold is it's more expensive to buy, essentially more dollars, or if you borrow money, it's a higher interest rate. So that's usually not good for gold. But gold was strong anyway, and we just showed that gold analysis, and it is super strong when we see that. So that when I look at the dollar analysis, the dollar is in a spot for a short-term upside bounce. I don't think it's going to be a lot. Maybe the inverse correlation will come in. I don't have anything brilliant to say to you about that, other than if we get into that inverse correlation again, that we could see that the dollar moving up and gold moving down for a little period of time. I actually think we're going to see, based on the patterns that I'm looking at right now, if that happens anyway, when gold starts to move up pretty significantly, I think we're going to see the dollar moving down pretty significantly. So an intermediate return to the inverse correlations is what I'm really looking for further out there. Short term, I don't really know. Longer term, I think we're going to see the inverse correlation come back with strong gold and a weaker dollar, or strong metals and a weaker dollar. That's my comment on that. Thanks, Waldo, for what's really a very good question. All right, we're going to move on right now. As you can see, this was our level 1 to 4 members that were putting questions in here. So I encourage you to take advantage of our special in order to be able to join us here live, and you'll be sent a link to be able to do that. So please do that. And Matt is going to tell you about that right now as he reviews our services and tells you about this great deal, one of the best deals ever. Matt?
All right. Thanks, Slim. Awesome work, team. As everyone can tell, what we do here is we provide expert level technical analysis based on Slim's over 50 years of methodology development when it comes to technical analysis, which we use that unique form of combining cycle analysis with momentum studies and Fibonacci swing high, swing low techniques. So with all of that, we bring together a opportunity for you to join as a premium member. And as a premium member, you can select from any one of our 4 core membership services. And we also have a day trader service for those of you that are intraday traders. But we have 4 core membership levels, level 1, 2, 3, 4. And how these work is that as you go up in membership level, so as you go from 1 to 2 to 3 to 4, essentially you're getting an expanded and more immersive and extensive technical analysis coverage in terms of the markets that we cover, the stocks, the ETFs, as well as additional videos, custom indicators, tools, trade planning services. So that's how this works, is that you will continue to expand in terms of coverage and tools and access as you go up. And then in level 4 is when you get direct access to our charts. So all those charts that you saw the team review today, as a level 4 member, now it is required that you have the Thinkorswim platform. That's the platform we do all of our work on. You would then have access to those custom charts, grids, and studies. So currently, as Slim mentioned, we do have a special going on, and it is an excellent special because you really are going to get a very extensive look at what we do here at Ask Slim. It's a level 3 membership. It's for 1 month. It's $59.50, so it's half off. And it is non-recurring. So there's not any risk in terms of a continuation. If you like what you see, we'll send you another special offer for any one of our other levels. So level 3 is going to give you extremely broad coverage when it comes to symbols, our complete focus list, and then also our trader library. It's going to give you access to the MCM, which I'll pull up here just as one of the components that I'm going to demo. I'm going to do a live tour and trade planning session on Tuesday next week. So I'll send out information on Monday. I'll look to go live on YouTube, or at the least post it on YouTube. So what I have up here is the market conditions monitor. It's our pro version. So as a level 3 member, you're going to get access to this. This is an extremely important tool because it is going to give you the combination of key information regarding the momentum conditions at multiple timeframes. So we have developed an algorithm that looks at multiple timeframes, and it takes into consideration our 2 most dependable momentum indicators, the reversal scout and the slim ribbon. So these are momentum, even trend indicators. And we combine a set of logic for these multiple timeframes to the trader style of your choice. So it's really important that as a trader, obviously, we know what we would consider to be our home bases when it comes to our trading styles. So if you're a near-term trader looking at the next, let's say, few days or up to a week, this would be a great spot to come in to see what our system is suggesting in terms of the overall trade setup condition using those multiple timeframes. And you can see right now that this is very sensitive in terms of changes to momentum. We have a 15-minute time frame built into this for those near-term traders, which really helps with signaling. And that is a huge advantage. So you have the combination of getting a quick at a glance what the condition is, and then beyond that, being able to be notified and informed when changes are occurring. And those changes are extremely useful in terms of taking action, right? So these can be ways to monitor your position if you have a position on, because you can get very, very granular with what we're looking at here. As it shifts from, say, bullish to slightly bullish or neutral, or jumps from bullish to neutral, you could set an alert that lets you know something went neutral. You can then immediately go to your chart and see what's going on. And as you get used to it, you would know what that means from a technical perspective. So this is an extremely powerful tool in that it gives you information, key information regarding momentum, and then also can give you signaling information on top of that as things change. And again, you have multiple trader styles that are built into here. As level 3, you don't get the intraday, but you get near term, short term, intermediate. And what I like to do here is pick a symbol. So let's just say we were to look at Apple, and you can look at Apple and you can get a more single symbol overview, and it gives you the very clear picture of what the momentum is in these various time frames with our 2 different indicators. Because the reversal scout is typically more sensitive. That's why we call it the reversal scout. It's looking out front to see if things are changing. And then when you have that alignment between the reversal scout plus the slim ribbon, then it's a more meaningful change. So when you see something like a near-term bearish shift in Apple, that likely suggests that there's a corrective period that is underway and some downside projections are now in play. All right, so then if I jump to the short term, you can see that right now it's neutral. So there's a battle going on between the bulls and the bears. And then if you go over to the intermediate time frame, same thing. So very choppy, but this near term, short term condition is turning a little bit weaker. So when you can combine this with our cycle analysis on our charts and our key levels, the picture becomes very clear in terms of how you can look to set up some trade planning opportunities for yourself. You'll have all that key information in there. And then in combination with that, you can use this as your live guide to what's happening. So I wanted to just spend most of the time on the market conditions monitor. Again, point out that this tool is available with level 3. There's over 140 symbols that are built into here, and you can very, very, very efficiently and effectively get a sense of momentum. Click on the trade setup condition, and that's going to instantaneously tell you the most recent changes to those overall conditions based on the multiple timeframes. Okay, so you can see that happening in these symbols. So it's just an awesome way to be able to have your pulse on over 140 symbols at multiple time frames for different trader styles, and then jump to your charts to see what looks of interest to you, or be notified when changes are happening. So whether you would already have a position, say in ARK, and you want to be notified if it went and dropped to say neutral, because that might tell you might want to either lighten up, or maybe it's another opportunity that you're going to follow. If you were to lighten up, maybe you look for it to shift just to bullish because you've watched it long enough and you've been riding some profits, and the first sign of some momentum shift, you might want to be notified. So this can help in several different ways in terms of trade planning and execution. All right, that's what I wanted to cover today. Again, we have this special going on. It's only for one more week for $59.50. It really is an extraordinary offer to get extremely in-depth services, content, analysis from the team. I'll be going live next Tuesday, doing a tour, and also going live in terms of trade planning. So what that means is that I will be using the market conditions monitor, and we'll look at various symbols that the audience would like me to pull up. We'll check the market conditions monitor, and then I'll also just be using this as a trade idea guide for myself. So you can see that live next Tuesday. All right, back to you, Slim.
Okay, fantastic. Great work showing that. I just want to make one more comment. And, what's unbelievable is that, $59.50, $59.50 non-recurring. You're going to get Avi's Future Speak every single Wednesday. You're going to get Katie's option ideas all of the time as she posts that. And you're going to get over 1,000 videos that we've all produced, including some 350 evergreen videos that I taught over the years of things for tools for text, for technical analysis, trader psychology, different ways to approach styles. I mean, all of that is included in that for $59.50. So we really want to let people get a great picture of everything that we have to offer on the SLIM site. So
yeah, you can see the dashboard here, just the amount of content and services. And as Slim mentioned,
I actually grabbed it back. So you want to share that?
Oh, sure. Yeah. Real quick.
Go ahead, share that.
I'll put that up.
Yeah. Okay, you're back.
All right. Yeah. Here's the dashboard. Now, at first, it might be overwhelming, but as this is like a kid in a candy shop in terms of taking your time and enjoying all the different aspects. And you can step yourself through these. Every one of these services will have some kind of resource guide attached to it. And as Slim mentioned, in terms of what Katie offers with the option trade ideas, and Arvi, he has several areas here that he manages him and Slim both collaborate on a Future Speak. And with Future Speak, you also have these Future Speak minutes where you can click on a specific market and it will take you right to the video portion of that analysis. So that is extremely efficient. And there's over 20 markets in there. And then also in terms of that trader library, you can see here with the trade planning video. So there's office hours. I'll just jump to here with RV. This is a weekly opportunity to hear Professor RV discuss the technical analysis aspects of symbols of your choice using our methodology. And he puts together not only a really, really informative video with, because RV is a professional trader, you're going to get insights into the mind of a professional trader as well as the technical analysis side of things. And then he posts the video as well as the charts. So just that alone is probably worth the service itself. And the final thing, again, is that market conditions monitor, which I pointed out, and I just wanted to show the ranking system. I mean, there's so much more that I'll cover on Tuesday. But you know, what's interesting is each one of these services are really geared towards your trading style. So this one is a 3 to 6 week outlook. And also it goes beyond just momentum. It brings in some of our intermediate timeframe cycle analysis. And similar to the market conditions monitor, you click on directional bias and it will instantaneously give you a perspective of what we see as the overall sum of the evidence there. Now this one,
click on the OBI. I'm curious which ones
Sure.
are orange and telling you reversals are coming. You need to scroll down a little bit to get it.
yeah, let's see here. Yeah, right now there's not a whole lot that is overextended.
FTX
Either.
oversold.
Yeah, oversold for
Possible
FTX,
bounce.
and then there's FEZ, which is extended on the upside. And that's
Yeah.
about it, I think, right now.
Yeah. Okay, not a lot. That's a really important indicator, but
Yes,
it's
it
great
is.
to look at that one. So
Yeah, now this isn't real time.
we wanted to make this a short promotion, but I got
Yep.
so excited about
You
the
did.
stuff that yeah. Okay.
All right.
Well, let's get back to this
That's
to what we're gonna do next.
Sounds good.
All right. Okay, let's move on in here. We're going to look at the stock market analysis and projections. Of course, important information. This tells you about our approach to analysis and how you use that, and of course, the important aspect of trade ownership. You need to own your own trades, no matter what anybody says about anything. It's got to be yours. That's one of the keys to success. All right, this is the market brief for this week. There's not a lot to say except for the indexes have small gains still. They're at around 12:30 p.m. Eastern time. That's after a very negative Monday. And then what was for like 3 days in this morning of a good upside rebound. The decline came on news about tariffs. The bounce came on news about tariffs as Mexico and Canada got 30-day delays. So overall, that big down Monday and the decline today has a net of a tiny little gain in the indexes. Earnings are pretty mixed. When you look at Google, Amazon, and AMD, I mean, these kind of market leaders, they had very big drops. And the reason is because of their forward guidance. And that comes because of their CapEx. They're spending a lot of money on AI. And it's those that need to buy the AI that are having a problem. Those that supply the AI are the ones that did so well. And until, of course, DeepSeek came out and they started to look really hard at these particular leaders that led the market up so far and that had so much future earnings priced into them, and they started to come down. And we see a lot of weakness in NVIDIA, which was, of course, the key supplier of GPUs. So right now, the market is in a rotation, which is holding stocks near the highs, but very choppy. And I'll show you that on the chart. But we're in a range that is persisting. Last week, I said the best way to probably trade the market is to trade the range, look for the bottom of the range and be a buyer. And we saw how that worked on Monday, and look to the top of the range and be a seller. And we see how that worked here today. So as the market reversed back to the downside, but new leaders may be emerging. A rotational market and a market where the leaders lose their energy if that kind of a market continues to be a positive market, then it's going to take other leaders to move the market up. Earlier in the show, I showed the analysis on some of the metals. I did not do copper. Nobody asked me about that one, but copper had a giant breakout. And I'm going to show you SCCO and some other metal stocks that look like they could be new leaders and very worth looking at for position traders, a little longer holders, because they could be setting in a bottom and could be some of the next leaders. So I'm going to show you that. So essentially what I'm going to bring you as we look at the stock market is a look at the S&P 500, the SPX. We'll go back to the MCM, which Matt just showed you. I'll take a little more in-depth look at some of those stocks that are positive and negative. And then I'm going to go into this mini stock sectors and show you the weekly analysis on 4 stocks for this rotational market that you may be interested in accumulating slowly here because the bottoms are not certain, and then look for put some potential upside movement in here. So let's take a look here. Didn't mean to go there. As we switch over and look at the stock market. So this is the S&P 500. We're going to look at the weekly, we're going to look at the daily, and we're going to look at the 2-hour, where we're getting all the information. So let's be very clear about this. The weekly and the daily work very closely together. We get the information from the multiple time frames. And those can be in conflict sometimes. And at this point, well, they're really not. Then when we look at the shorter term and we try to figure out, what a shorter term trader would be doing, we'd be looking at the daily and the 2-hour chart right over here and getting the information off of that. And we have on here our proprietary indicators. This is the option bias indicator right here on the a daily chart. This is the slim ribbon PO on the daily. Here is the slim ribbon PO on the 2-hour chart. And this is the ASLIM market condition indicator, which is moving up again and is up around the 63 level. Now, right in here, there is a 25 and a minus 25. That's the key swing zone. As long as you're above the swing zone, you're in positive condition. If you're below the swing zone, you're in negative condition. So, and that gives you great sense of feel for the market. When it gets into the swing zone, then you start to look for, what's going to happen from there. If it moves through, it's a very, very important message. Let's take a look at the weekly chart here on the S&P 500. So there's some high waves going on right in here where the market is rejecting this extension zone that we have had in here. So let's just look at the dominant and minor cycles that are in here. So here's where the minor cycle bottomed right here. This was the kind of hissy fit over the yen on that break. Here's where the dominant and the minor move together in a very small pullback right over there, which is very unusual. Usually it's something bigger like over here. This one at least was close to 6%. This was only 3%. That is almost imperceptible, not tradable, certainly. And I was looking for something deeper right in there. So I'm sure traders were thinking, well, I didn't get that one right. Well, I didn't, because the highest probability would be it would fall larger, but the smallest probability sometimes happens. So that's what it went in there. Now you can see in here the momentum as it came up in here and you got into this minor corrective phase. Well, it came down, but then we saw this upward turn right over here curling up. It's not very strong as we look at that, and it seems to be having trouble over here. Now, if you watched my year-end show, members would have seen where my upside projection was for the year, which is pretty much where this solid blue line is right over there. And that it's not very far. Now, if it got through there, then the next level is right over here around 62.90, where it possibly could go to if it got through the level that I think it's going to stop. Right now, this is positive. This says we are in this rising phase. It's having trouble in here. So essentially, when you have a mild upside momentum in a rising phase that is meeting the resistance area, it squeezes itself, it chops. And then you have to really ask the question, is this a distribution area that's going on, or is it a consolidation area? My guess it's distribution, but I want to believe that this area right over here is going to have a very sharp decline in a bear market into the middle part of this year. Sharp decline, I mean a correction or a potential bear market. That means like 10 to 20% out in this time frame. But that's just my gut feel based on what I see right over here. The market doesn't say that, and we don't say it's time to sell. Right now, positive momentum on the weekly. I say that to you because I don't want you to see these downward motions over here and say, that has to be a big decline. It doesn't. Or this one right over here that says it has to be a big decline. It wasn't. So that's important that you understand. These are just drawing tools that give us a sense for the rhythm in the market. Everything else is what we use to be able to give us a sense for the real conditions of the market. And these real conditions are still positive. The cycles are positively configured, positively translated, and that is continuing right now. Positive conditions on the weekly. Here's the daily right now. And what we're looking at is this minor cycle rising. And look at the chop that's in here. You had this big downside break on the DeepSeek. You had this big downside break right over here on the tariffs. And each of those happened while momentum was still strong. You can see the slim ribbon positive, the option bias indicator positive, slim ribbon PO on this day right over here, giving a signal that said upside resumption, which is remarkable. And the reversal scout still pointing to the upside right here. So momentum is still strong. What is this line, this downside line right over here? Well, that just tells you that there is a completion to this cycle right in here that's likely to happen. It could be that it gets down to a very high level, which is just under 6,000. That's not very far on the downside, 59.94. This one right over here is 59.54. That low right over there was around 59.22, and that support is around 59.10. So you can see in here between this area of 59.96 and 59.10 is likely where there's a completion of this cycle in here, and then we get to the next area. Well, if you're a very short-term trader or a day trader, maybe this says to you that you can take some short side trades, but you're taking short side trades against positive momentum on the intermediate holders, short-term holders in here, people that are still buying. And right over here, the 2-hour chart, which is still green. It hasn't turned down yet. So we don't have any bearish signals in here right now. We have just simply signals that say, and analysis that is pretty clear, that we are in a sideways choppy correction right over here under positive conditions. That says to us that once that's over with, wherever it lasts, wherever it comes down to, somewhere in here, we'll then get into the next rising phase right over here. So what are we looking at? Are we looking at a reason to sell if you're a short-term or intermediate-term holder? Or are we looking for a place that we would start to get more onto the long side bias? Well, when I look at this, the analysis says to me, positive on the weekly, right over there, positive on the daily over here, probably in some kind of a corrective phase that's existing right in this period right over here. And then even the intraday, which is having a hard time turning down, well, this doesn't say to me I want to be a seller. This says to me that I want to look at a positive market that ultimately, and you can see in here, this is the MDY, which is right there. That's going to be pushing to the upside also. And there's your rotational condition as you start to get mid caps leading the market to the upside. All of this says corrective process going on, likely to have some kind of a pullback that isn't really that significant, and then the market resuming back to the upside, and maybe even making my upside projections, up in the high 6100s or 6200 in this rising phase right over here. Then you get into a period where you're likely to get a bigger corrective process, but the market will have to tell us when we get into that. I'm just showing you how the cycles could possibly resolve. We're nowhere near that yet. So that is a look at the S&P 500, and that really gives you a good sense for where we are in the stock market regarding all of our indicators and regarding the cycle formations, the translations, the configurations. All of those, by the way, are in the glossary in our cycle analysis workshop. And you can really learn a ton about this style of analysis by investing in that workshop. So now we're going to take a look and we're going to switch over as we look at the market conditions monitor, and Matt showed this to you earlier in the show. He had a lot of focus on the near term, which is a little shorter term. I'm going to focus more on the short term. So the near term is kind of intraday, like 1 to 3 days. The short term is probably more in the 1 to 2 week area, 1 to 3 week. And we can see in here that our indicators have not yet even turned down. So when I look at that, that is very much in alignment with what I just showed you. Even right now, see if I can do force an update and see if that changed as the market turned a little bit weaker. And it should automatically update. So yeah, you see they're still just the same. So what we have here in the short term is that the diamonds on the 2-hour chart are the only one that went neutral in this downside move today. So that tells you that the market has, even with this 40-something point decline that we see in the S&P 500 right now, it's not enough to get us into what is this corrective period that we're talking about. On the intermediate right over here, you can see that, well, looking at the longer term, they are all very bullish. There's been no change in there. And they have been all set to very bullish for quite a while. So, and upticking from bullish. So they were bullish before they went to very bullish for the intermediate. Let's go back to the short term just to get a peek at what these different stocks look like right now. And we'll look in here at the trade setup condition, which we can scroll on. And I'm just going to move down here very slowly on here so you can get an idea of the stocks that are very bullish for the short term. Again, this is for like 1 to 3 week holders that are in good condition. You know, the Chinese stocks have really turned up. The European stocks have really turned up, as you can see as I move in here. So you have BABA as a stock that is in the Chinese stock category that's moving up. And you can see as I move up through the very bullish ones right over here, and you can get a good idea. Those are the stocks that are really very powerful by our read right in here. See Starbucks going to new highs, the bank stocks, JP Morgan moving to new highs, the ones that are staying very strong. Walmart is just absolutely remarkable. And look at all of these stocks that are just in very bullish short-term conditions still. So that's a look at that. Let's just switch this over to the very bearish conditions. And there's not many that are in here. Wynn, Las Vegas Sands, AMD, and then these other ones are bearish that you see right over here. And you can see that there's quite a number of them there. So I wanted you to see the ones that are bearish. Again, the change log in here will tell you the ones that change based on the short-term condition. If I were to go to intermediate, then the changes on the change log are about the intermediate condition. So this is a fantastic application. And you can use this for your trade planning. You can use this for really for your, longer term holdings. If you're looking at, stocks that are on the move, but wondering about what the condition really is, you can look at, intermediate to get a better sense for the stocks that are strong or weak for the longer term. So that's a look, I think, at the very, very important market conditions monitor, which is so integral to the work that we do. So I'm going to switch over right now. I just want to do a little look at some stocks. But before I do that, I want to remind you that our level 3 trial is on right now. And it's not gonna last for very long. It's 50% off, only $59.50 non-recurring. We gave a pretty good review of that earlier in the show, so you can go back and look at that. And if you want to sign up, go to the top of the website. You see that special offer, 50% on level 3, and you can sign up for that. So that's just a fantastic offer. You're going to get so much education. For me, 50 years at this, and I really poured my heart out into the teachings in those videos that we have. There's over 1,000 videos in our library, and that's included in this. So you can sign up for that. And I'll go back to the part of the show where we demonstrate a lot that's in here. You'll love that. All right, stock market, market condition monitor. Again, I want to remind you that's included in the level 3 service, level 3 and 4, and you don't need any special platform. That just comes in through our website. And let's do this little mini stock sectors right now. So I made a point as I looked at this analysis that the stock market was really in a rotation right now. It's kind of churning. Don't really know if it's a big consolidation or it's just stocks being distributed right now, but it's liable to last for some months yet, based on the analysis that we just showed, without having any significant downside, and then moving up and maybe running into resistances. But some stocks are still going to do well and carry the market. And these are 4 of them that I think are important. So those of you that get our analysis level 2, 3, and 4, you have seen a monumental, monstrous, gorgeous breakout in copper. So SCCO is a stock that you could trade based on the copper market. I'm just going to switch over and we're going to look at these 4 stocks. So let's look at first the SCCO, and I'm just going to look at weekly analysis right in here because that is the key. So I just want you to see the rhythms in here in the cycles and how clear they are. And of course, one of the important ways that we read the rhythms and the cycles is using the reversal scout. And you can see in here that when the reversal scout turned up right over there, that was the beginning of that cycle. And when it turned down over here, that was the confirmation of the peak of the cycle. Here is where it turned up. You can see it was a little early, so this market wanted to have one more sell-off. And now this is an engulfing bar right here on the weekly. And what that says to me is that this is likely, with this upward momentum, an important upside turn. It's pretty reasonable with Southern Copper at 97 right now to expect it to get up to this area of 106 to 110, potentially up here to 113, and it could do even better than that. But based on the copper pattern, I think it's better. And based on what I'm looking at here, I think this is an opportunity to hold something for quite a number of weeks in the intermediate term. Again, if you're looking for a rotation, you believe in the rotation, you believe as I do that the AI stocks and those high techs are going to be a source of funds rather than money going into them, then the funds that come out of them are going to look for things of value. They're going to look for things that have potential upside. And I think SCCO is representative of that. Let's look at a few more material stocks, and you're going to see the similarity as these alignments set up in here. So this is BHP Billiton. I'm going to put up the weekly analysis. So this is it without the cycles, and this is it with the cycle analysis. Remember, we're just looking for rhythms of the money flows in and out. You can see how clear is this right over here. Where are we now? Where we just made this upward turn right there. Let's just look at these last 3 cycle rhythms, and you can see that this upward turn came, well, a little bit on the early side, but it sure looks real to me. Another weekly engulfing pattern. Those are not that common when you get those, and those are meaningful. So this BHP Billiton as an upward turn, again, we're looking at potential upward moves that can last for a while. You can see as I look at these cycles, and this has been a neutral to bearish time frame for this number of years in here. Still, you can see this was a 7-week rally. This was 9 or 10 weeks in there. This was about 9 weeks. This one was only 5 weeks. When you look at that. But here we are in week 1 on that reversal, and that says to me, look for potential upsides. So again, we're looking at potential rotational stocks that money will flow towards, and especially with the materials improving. Here is your Rio Tinto. Here is it without the cycle analysis, and here it is with the cycle analysis. As you see, the same type of activity going on. The low actually came here really early. It came down here in a test and again engulfed. And here we are in this rising phase. These two blue lines in here. Katie has the job of looking at all of the cycle analysis and deciding where the bottoming timing is. And she does that with our cycle low timing tracker. So a lot of the stocks that we look at are listed on that cycle low timing tracker. And that's why we put in these two verticals right in here, because generally the troughs come with 3 bars or so, one side or the other of the ideal trough that you see right over there. So you can see this ideal trough right over here, but it was about 2 bars early. This was about 2 bars late. This was about 1 bar late. This one was pretty much spot on. This one was about 3 bars early. So that's the nature of the principle of variance. It's our job to recognize through all of our other indicators when this is going on. And you can see this upside move right over here in Rio Tinto. And the last one I'm going to look at is Vale, V-A-L-E, another material stock. Again, without analysis right over here on the weekly, and with the analysis right here, and you see again upward turn. Now this is a very good example of how cycles create trends, and where you have higher peaks and higher troughs. So there's your peaks connected right over there. Here's your troughs coming down over here. So you have this downward look to the channel in here as you get lower peak, lower trough, lower peak, lower trough, lower peak, lower trough. Momentum turning up on each of these upward cycles, as you can see. And weak stocks, when they're weak, you get a lot of this chop in momentum. They turn right back down. So in this case, we're early. We have the upward turn. The engulfing pattern came 4 weeks ago. So this one was one of the early signals on the upside. And again, this could be still in the downward trend. It could make it up to some resistance level and then turn down again. We'll get that indication from the shorter term cycles when we look at daily or intraday, but right now I'm only showing you the weekly because I'm really showing you for longer term holders, and that there is a high probability, and again, everything we do is probabilistic. There's a high probability that we're early in rising phases and the money is just starting to flow into this group. That's the reason I wanted to show you this mini stock sectors. RV is the owner of stock sectors. He's the one that does bigger ones, sometimes shows you 15 different stocks or ETFs or, country ETFs or different things all at once. I like to bring these little mini ones to this show because I think it's really valuable. And I haven't done that in quite a while. So when I see them really pop out like I did right out over here, I want you to be able to take the opportunity because I'm putting all of my gut feel into what I think is happening, and then earlier in the show show you how to use all of the things that we look at to really get a sense for how far these could go, or when they're giving you warnings that they're really not going. So that's what I wanted to look at. I think that was really valuable, and I hope that if you take some of those positions, that they work out for you. So at least what we do here is give you a heads up. And remember, you have to own the trade. It's not our trade, it's yours. And that means that you get in when you think it's right, in the size that you think fits you the best, and you get out when you think it's right, with having nothing to do with us or anybody whatsoever. That is Market Week. And I'm going to turn this over to the team so they could say our goodbyes, but please do go to our show and look around. So go to our site and look around so that you can get a good sense for everything that we do. Team, good job, good show.
Oh, fantastic. Terrific. I mean, that was really, really insightful from everyone. Slim, fantastic work. Great job.
I love looking at all of our various indicators, market condition monitors. Awesome.
Yeah,
Yep.
fantastic.
Awesome
Great work,
stuff.
everybody. Have a great weekend. We'll see you live in a couple of weeks. And we'll see you recorded, and I really believe next week. And that's, I never really know that schedule. Have a really great, safe weekend. See you next time.
Take care.
Bye-bye.